Good morning. Thanks so much for tuning into the trade setup right here on BQ Prime. The big Fed meet is out of the way, and the consequence of the statements is that the markets did very well. So here's the big Fed outcome, right? The Fed hiked the federal fund rate by 75 basis points yesterday to a range of 2.25 to 2.5. Jerome Powell outrightly rejected speculations that the US economy is in a recession. They've mentioned that the future rate hikes will be data dependent and not guided for. I think this is what made the markets believe that the future may not be as incrementally hawkish as they may have thought of. And actually, incidentally, quite something. For the first time since February 2020, the FMC statement did not mention COVID or coronavirus at all. It's quite something. The 24 months out, or maybe 28 months out, inflation and economy have taken center stage. COVID is past memory, so to say. Now, as per Bloomberg estimates, the market consensus is now gathering around two more 50 basis points rate hikes, one in September and one in December FOMC meetings, with the Fed fund rate peaking at about 3.4%, lower than the previously estimated 3.8%. And I think this is what led to all asset classes performing the way they are. Viewers would remember that the last time that the Fed hiked, and we were speaking to Jeff Dennis of ex-UBS, and he had mentioned the sign was that the bond yields came off after a 75 basis point hike. I think that is what happened today as well. So one, what the US markets did, and NASDAQ had a flurry. I mean, the results weren't the best, but NASDAQ up 4%, very strong move out there for that index, and that led to S&P 500 and Dow Jones as well, of course, doing well. And then look at the 10-year yield is at 2.75. It's showing that 1% up as of 7:30, but at 2.75, the yield is very capped. It did not spike up, which is actually a great sign. Dollar index at 106, no great shakes out there. In fact, the dollar index too, the US dollar was a bit quiet, as a result of which gold and some of the others have gone up. Bitcoin is up 7.5% as well. By the way, Ethereum is beating Bitcoin hands down for all you cryptocurrency aficionados. So keep that in mind. But I think this will spill over into what Asia will do as well. So I think the SGX Nifty should be showing a sign of moving in the green. So yep, about 100 odd points, and no surprise there, right? So frankly, the trade setup is zero surprises, not too much of intelligence, because it's very easy to say that the global markets momentum will spill over to the Indian markets today. So no arguments thereof. The rally in Nasdaq as well as Accenture, which was up about 4%, could well lead to further short covering in IT today. Remember, yesterday IT had a fair bout of short covering, a significant short covering in multiple stocks, Coforge, TCS, a bunch of others. Now, I think that bout of short covering it's anyways the monthly expiry, so either rolls or covering, as the case may be, will happen in the session today. And I do think, by virtue of the results that have come out thus far, that manufacturing-led stocks are showing very strong results and could be the theme for today as well. We've seen some of these looking fairly interesting over the last few days, and I don't doubt that today would be any different. A bunch of results today from the index side: Dr. Reddy's, FinServ, SBI Life Insurance. Then you have Vedanta, TVS, actually Nestle too, from an index perspective, comes out with numbers. There is SBI Cards, and there is quite a degree of news flow on SBI Cards today, which I'll come to in a moment. There's Shree Cement as well. So a bunch of index names and a bunch of very interesting mid-cap names. Keep in mind, viewers, we've seen that everything which is economy opening up playing theme has done well. Very interesting to see what Westlife does in the session today, what Jubilant FoodWorks does in the session today. So all of these stocks should be in focus. Amongst names which are expected to come out with strong numbers could well be GHCL as well. So watch out for all of these in the session today. What about stocks to monitor because of what the numbers have looked like, or some momentum within them? Let's take stock of that. Tata Motors, optically, not a great set of numbers, you have to admit. That's the first one on my list today. Revenues were up about 8% at 71934. The Bloomberg estimate was 71509. So in terms of numbers, Tata Motors numbers on the revenue side largely stayed in line with estimates. We'll get those numbers up in a moment. EBITDA fell about 54% at 2412 crores. The Bloomberg estimate was 6608. EBITDA margin at 3.35, much lower, and the net loss at 5006 versus 1039. So on the face of it, Tata Motors numbers, revenue looked okay, but otherwise other line items didn't look all that great. But most brokerages continuing their optimistic stance. The Nomura note, a buy at target price of 520. They say the first Q was a miss, of course, but the deleveraging is a key driver for the stock. The MHCV recovery is on track and PVs will ramp up further. JLR will benefit from improved chip supply, which is something that I think all quarters of automakers or observers are saying, that the semiconductor shortage and the chip shortage is now looking like getting resolved very, very quickly, if not already. And the net auto debt increased, of course, but despite all of these issues, brokerages maintain the optimistic outlook on Tata Motors. So it's a difficult one to call today. Left to the numbers, I would have thought that there could be a bit of an slip today, but brokerages are bullish. The market's looking constructive. You never know, Tata Motors could have an okay outing today. Why I said manufacturing, right? Look at the numbers of Schaeffler India. It's a bearing company. The consolidated numbers, revenues up 42%, EBITDA up 55%, EBITDA margins expand. Can you beat that? A bearings company at a point of time, yes, and this is YY numbers at a point of time when, yes, metal prices have come off, but it's great to see it immediately showing in Q2 itself. And this leads one to think of what could happen in Q3. For Schaeffler Q3, for others Q2. Remember, SKF India too had a very strong set of numbers, and the net profit up 76%. I could have very well stated that this will be the stock of the day. Could well be. The point is that these stocks maybe have had a bit of a momentum and not very liquid, so not very easy to have large trades in. So be mindful of that. But just the fact that what Schaeffler has done, what Elantis Beck has done, what SKF India did, seems to suggest that manufacturing is right out there. And this quarter, in select cases, for select companies, might actually be really, really good, as is the case with Schaeffler India. And then the opening up theme, as I was saying, now, you could argue that YOY or QOQ, which way you want to compare some of the hotel companies. I've chosen QOQ because YOY would just be very wrong to compare. But QOQ, EIH, revenues up 31% at 394 crores. The estimates were 349. EBITDA up 5x at 99. The estimates were 82. EBITDA margin obviously looks much better than the corresponding quarter. And net profit at 62.82 versus 14. But keep in mind, forget the comparison versus the quarter-on-quarter performance versus the estimates as well. EIH has come out with flying colors. So this one could be another one that people might want to watch out for on the upside. Dixon, you could argue, maybe didn't live up to its estimates. So you could argue. So like revenues are okay, 2855 crores. The expectations were 2822, but the EBIT at 76 crores, near 76 crores versus estimates of 106. Margins got hammered at 2.6. Net profit 27% down at 45 crores. The estimates were 53 crores. You would have expected better from Dixon. Really, it's one of the largest in this space. It'd be interesting to ask the CFO as to why is it that the performance looked a bit tepid compared to what was estimated. Morgan Stanley has an underweight stance. Credit Suisse has an overweight stance. So very difficult to figure out how each of these stocks could behave, simply because different experts have different views on these. I would suspect that Dixon could have a slightly iffy day to day, despite the markets looking okay. But let's see what the management commentary is like. They'll be talking to us at 11, so it'll be interesting to see what they have to say. Biocon, again a number that disappointed. Revenues up 22%. So 2140 crores. The estimates were 2354. So lower revenues, lower than estimated. EBITDA much lower than estimated. EBITDA margins much lower than estimated. Net profit much lower than estimated. They may have done well on a corresponding quarter basis on a YOY on the net profit front, but no, the numbers look a bit tepid, really, especially on the EBITDA front. And the fact that the revenues went up but margins have come off so much leaves a bit to be desired. So Biocon, in all probability, will be a stock that will start off lower. Why did the quarter again look so bad? We'll be talking to the management of Biocon today. Some other results in focus include a Mahindra Lifespace, wherein the Q1 pre-sales were at new quarterly high, or a Elantes Beck, which is the highest quarterly top line ever. VIP Industries, Q1 EBITDA margin at 17% versus 6%. Again, the economy opening up theme has played really well this time around. What did do well? United Breweries, Q1 EBITDA margin at 11% versus 15%, or Welspun India. And most textile companies have had a irritating cough this quarter around. This one no different, 8% versus 20%. So not the best of quarters for this one either. So let's watch out for this one. There are some queries, of course, and I'll come to them in a moment. SpiceJet, DGC has capped SpiceJet's capacity to 50% for 8 weeks after findings of various spot checks, inspections, and airlines reply to a show cause notice issued by the regulator. SpiceJet has, of course, said none of the flights will get cancelled because they've already set up the schedule. But imagine SpiceJet's capacity capped at 50%. So on all routes that other airlines fly, they could have a field day. I reckon that while this is negative for SpiceJet, people would construe this to be positive for Interglobe Aviation. So watch out for both of those. Despite the fact that there are new airlines coming in play, this by itself, and SpiceJet is, well, you could argue reasonably large, so to say. This should augur well for Indigo for sure. So you might actually see a negative reaction on SpiceJet. You might well see a positive reaction on Interglobe Aviation, despite crude prices having inched slightly higher overnight. Then Bajaj Finance, it's been raised to overweight at JP Morgan at 8,500. Morgan Stanley has come out with a note with a target price of 8,000. They are saying that the NI beat with comforting commentary has addressed NIM concerns. Consecutive quarters of 5% ROA should result in consensus estimate upgrades. They reiterate that the unsecured consumer finance should make a strong comeback in FY23, as a result of which they see a positive read-through to SBI cards where they have an overweight rating. Keep in mind, CLSS come out with a note today on the payment sector, and they have a sell rating on SBI cards. So remains to be seen which way it goes. Stocks closing above the recent swing highs include a Bharat Forge, which is above the 200 DA moving average and short covering since the last 5 days, or Adani Ports and SEZ, which closed above 760 and June highs were about 758, or PVR, which closed at 2021 rupees. The COVID highs were, the close was at 2021, excuse me, and it's near the pre-COVID high levels of 2086. And SBI, which the close was at 528, and the April swing high was at 520. So very interesting to see if these stocks have some momentum to themselves in the session today or no. Remember, all of these are actually looking at the bullish signals on their daily closes or otherwise. Just before we get to some queries, just want to highlight, since I was talking about some companies and their interactions or their results, you'll be able to hear Dr. Satyanarayan Chava of Laurus Labs today at about 10 a.m. You'll be able to hear Saurabh Gupta, the CFO. So to Dr. Chava, the questions would be about how strong the quarter was, of course, and what does this mean for the quarters ahead as well. Though I do think on the revenue front, it'll be interesting to see if there is some bullish optimism even after what they've done in quarter one, because they have a tall ask to reach the $1 billion mark. Then Saurabh Gupta, CFO of Dixon, they did well on the revenue front, but what about EBITDA margins, and can they pick up to reach the guided range? Again, a tall ask for them. Siddharth Mittal, MD and CEO of Biocon, very tepid quarter, and the questions to Siddharth would be, can there be a pickup expected going ahead when all the other pharma stocks are doing well? And similarly to MV Ramana, the CEO of Branded Markets India and EM, said Dr. Reddy's to talk about how their quarter goes by. Remember, pharma is on a bit of a roll. All of the stocks yesterday did really well, led by Laurus, but Divi's, I think Sun or Dr. Reddy's, one of the two, Cipla, all of them had a really good day. So pharma's on a bit of a roll from a trading perspective. It's probably have high probability of an upside than downside. So watch out for that. And the queries around Tanla and Laurus, now I can't answer stock specific queries, but if you really want to understand Laurus and what could happen going ahead, you don't really need anybody's opinion. Just hear a good interview, and I commit that we'll do a good one. So you may want to tune in at 10 a.m. to hear what Laurus Labs has to say. So keep that in mind. Nevertheless, viewers, have a great day ahead. Have a safe day ahead. And the Fed outlook, as well as the US markets performance, has cemented the probability of of what we'll do today. Of course, if for all of you who are thinking of whether you need to have a large cap portfolio for safety, or do you want to pepper your portfolio with mid caps and small caps as well, we speak to two mutual fund CEOs about what is it that their fund houses are currently betting on. Should you bet on mid caps or should you bet on large caps? That conversation today on Twitter at 8 p.m. So you may want to tune in for this as well. Thanks so much for tuning into the Trade Setup today.